This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Thursday morning, and it's been so far, amidst all of the volatility, a very, very quiet market. I mean, for example, morning guys, yesterday the Nifty ended with a 0-point change. Nothing. Unchanged.
And I guess we're not alone, right? Because even Wall Street is just very listless, reacting to earnings. It's just, I don't know what to call it. It's too early to say Ides of May, but okay.
It's a summer month, right?
It's a summer factor.
The Nifty didn't move at all, and the S&P 500 overnight didn't move at all.
Summer heat.
Right, taking off.
They took a cue from us.
Okay, well, so that's the market that we got to report on, right? Where not very much has happened, and but there is, of course, I mean, selling at higher levels, etc., which I'll just get to in just a bit. But to begin where we left off yesterday, another flat and absolutely data-less session overnight. No data, and this was true day before yesterday as well. And of course, I mean, the Dow was up 0.4, S&P was absolutely flat. I mean, nothing, no change, and that's kind of rare. And of course, the Nasdaq did what it did, which was down about 0.18%. So no real indication handover one way or the other. The 10-year went up a little bit, but I suspect, you know, the move in dollar yields, etc., this is just a bit of a reversal with no real basis to it. Because, I mean, they've been kind of lying in a particular way for the last few sessions. So 4-5 basis point move on the 10-year, 4.5%, back at 4.5%, and the dollar index back at about 105.5. So, you know, again, not to read too much into this, I won't. Oil prices, they've also creeped up to about 84, but that's nothing, about 0.75% higher or so is where oil sort of ended. Now, that's the global setup, right? So no real big Q or anything of that sort. Just to sort of circle back and tie in the levels here in terms of what may happen. So the Nifty, I would say, and it's kind of, I would say it's still early to say, but I'd still say it, maybe we've kind of sort of completed something. We need evidence for it. And the reason I say it is because the Nifty yesterday almost retraced down to the 61.8% retracement of the recent up move that we've had. And then it attempted to bounce. So the low was about 22,185 yesterday. The 61.8 is 22,165. So we almost got to it, and then there was a bit of a bounce. But as I said, I mean, you know, we'll need to see if indeed we've completed something or there is something more here on the downside. So that becomes important. The low of 22,185, and then which is the yesterday's low, and then 22,165, which is the 61.8 on the way down. On the way up, I mean, look, track these hourly averages. The 20 hourly is 22,351. By the way, the 40 day is also around those levels. 40 hourly is at about 22,412 on the way up. These are very near-term, 100, 150 points on either side. But that's the way, that's the market for you. It's nothing big, no big fireworks, etc. It's been sort of ranged, and it's kind of been selling off. Bank Nifty broke the low of 48,088. That's a swing low from last week. It attempted to recover from the 40-day exponential, which is 47,894. So we are, I mean, so that becomes the immediate kind of sort of level to watch. Roughly 47,900, which is right here, right, where we left off yesterday. So that should act as support. I'm not even going into resistance, etc. There's enough to do. There's a 20, there's the 20-day moving average, and beyond that, there are these recent highs, etc. The important thing is for the market to kind of build a base, hold on to these levels, and not sell off more. I would say maybe, you know, will we look for a bounce? That's the question. The GIFT Nifty will come up on your screen. It'll give you a sense of how we are starting absolutely flat. So, I mean, if there has to be a bounce at some point, it's an idle kind of a start. Let's see if we get it. Surabhi.
Well, absolutely, Prashant. Not too many cues on the international front. And markets are actually in our neighborhood are very, very mixed. Nikkei is up, Kospi is down, Hong Kong's managing a little bit of green. So it's all over the place. So I'll just stick to the micros here. And in terms of micros, it's all about earnings. That's what we've been talking about. Now, after market hours, there's nothing bombastic that's come out which could really shake sentiment one way or the other. No major positive surprises. I'll just point to L&T for an instance, because if you thought this is something that can spark another big move in the market, well, guess what? That's not happening, because L&T has ended FY24 on a very strong note. You know, order book has grown over 30%. Revenues have topped estimates or topped their guidance. But the problem is FY25 and the perennial issue with L&T on margins, that doesn't seem to be going away. They've missed on margins in Q4, and the guidance for margins for the current year is really bleak. I mean, it's not really lighting up the street at all. So not expecting fireworks from this one. Today's earnings calendar, very quickly, so it's a big one at that. There's SBI, there's Asian Paints, a couple of other large mid caps, Mahanagar Gas. We'll hear from a lot of the PSU banks as well, IOB, PNB, etc. Get more color in on the numbers. Now, there's earnings driving the market, and then there is RBI driving the market, and that's also where there's a lot of action. So I'm going to watch out for a couple of things here. There's relief for Bank of Baroda because Bob World finally gets the regulator's blessings. They can start onboarding clients. The other RBI action perhaps is going to impact the gold financing space today because there the RBI has again reiterated a very strict warning saying you cannot exceed prescribed limits when it comes to cash loan disbursals, gold loan disbursals, and that limit is 20,000. More on that story with Ritu as we go along. So watch out for this space because the RBI action continues to drive movement in the market. Finally, coming down to the fund flows, we had a big sell figure from FIIs again yesterday. About 6,000 odd crores of selling, 6,600 crores of selling, and about 6,000 crores of DII buying, offsetting it. But again, I remember we started this year with this whole premise of a big FII gush of liquidity coming in. Guess what? It's absolutely missing in the last couple of months. So far in May, we're down about 5,000 crores. April was negative, about 8,600. March was the only outlier. Otherwise, it's very, very skittish, these FPI numbers, including, of course, yesterday. So, Nigel, that's how I'm looking at it, basically sticking my focus to at least earnings. But you tell us on F&O and the other technicals, how's it looking?
Well, yesterday's trading session, the Nifty ended absolutely flat. And actually, it's a writer's delight when this happens. Because if you write a call, you write a put, and in fact, you'll make money, provided the Nifty doesn't move at all, because the IVs are relatively higher as well. But as I mentioned yesterday as well, don't go for any kind of naked option writing. It can whipsaw you and clear you out on both sides. So keep that in mind. The S&P 500 took a cue from the Nifty. It didn't move at all. What did the FIs do yesterday? They unwound some longs. They added some shorts. The short position goes up to around 61%. And in absolute terms, from being net long, now they're net short. And that net short positioning has gone up to more than 90,000 contracts. And that graph will tell you the picture. 91,000 contracts as we speak, from being net long by close to around 25,000 contracts. I like a net short market. In the past, we've seen even 1.5 lakh contracts on the short side. But normally when we move to this 1 lakh mark odd on the net short side, that's where you get a bit of a bounce. This time it could be a little bit different because we have elections. But normally a net short market is something that we like. What about the options data? 22,400 call, 22,300 put. Both of them were fairly active. And the writing that I was talking about, at the start of trade, it was 50 rupees, ended at around 35 rupees. At the start of trade, the put was at around 105 rupees, ended at close to around 68 rupees. And just plugging in the openings with these strikes, I'm giving you a broad range you're looking at. On the downside, 22,185, which incidentally is yesterday's low. And on the upside, since the 22,400 call is seeing aggressive writing, well, that's a bit of a resistance zone. The technical levels as well should come up for you. The Nifty Bank in the near term, you wanted to breach the 20 DMA. That's going to be quite important. It's 300 points away from current levels. So for the Nifty Bank that's actually been underperforming, you wanted to get past that mark. And from a bullish perspective, you don't want to breach the 50 DMA. So those are the key technical levels. What about stocks that we're tracking? Two stocks from the F&O pack. You have, Canara Bank as well as Piramal Enterprises. Both of them have moved into the F&O band. So we'll have to keep an eye out on both these two names. And another stock I'm looking at is ABB India. Why is that? Yesterday it was, moving up. And in this market, you don't want to sell your winners. You don't want to take money off the table in a hurry. And this one in the last 1 year has been a big outperformer. So good up move is what we saw on solid volumes. Even in the futures market, you saw a big surge in terms of open interest as well. Fair bit of built up, more than 10% open interest. So fresh longs being seen out there. And there was delivery-based buying as well. So ABB India, that comes out with a set of numbers tomorrow. Well, that's a stock I'll track. Moved with the momentum, long addition, delivery-based buying. You'll want to keep an eye out on this set of numbers as well, guys.
Okay, absolutely. ABB indeed has done really well in the recent past. Let's move on there and kickstart things with the equity call of the morning. Surendra Goyal of Citi says earnings growth so far is ahead of estimates, ex of energy, with the EBITDA growth of 9% and PAT growth of around 14% on a year-on-year basis. Among sectors, financials, discretionary have seen earning beats and a strong year-on-year growth, while energy has missed. Both FIs and domestic mutual funds added active weights in staples and cut active weights in materials in the March quarter. For the near term, election results on the 4th of June remains a key watch point. Citi's March 2025 Nifty target of 23,900 has, just a 7% upside.
Well, let's get you some money market views now. On the rupee, Parul Mittal Sinha, Standard Chartered Bank says USD INR, we're stuck in a tight range of 83.45 to 83.52 to the dollar. During the week, as dollar demand by importers and FPI outflows were met by USD supply from local banks. With no major data releases, she expects the USD INR pair to trade between 83.4 to 83.65 for the week ahead.
On bonds, Parul says the Indian bond yields moved lower as global rates ease post softer US employment data and $400 billion bond buyback announcement by the government. However, some of the down move reversed in the last couple of days, primarily on profit booking. With India CPI expected to ease in the near term, movements in global rates will be the key driver for the bond market. She expects the 10-year benchmark yield to trade in a range of 7.05 to 7.15% for the week.